Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me for the first time Abraham Drost. He's the president and CEO of Carlisle Goldfields, and he is a registered professional geoscientist. He's had over 25 years of experience in the Canadian mining industry, and he's served as a board member or in senior management teams for several Canadian companies like Premier Gold Mines, Premier Royalty Corporation. He was a director of Premier Royalty. He also was a president and director of Sabina Gold and Silver Corporation. Also a former president and director of Sandspring Resources. These are names that are well known to people that are in this sector who invest in this sector. And so he's had quite a background. Early in his career, he toiled as a consulting geologist with the Mines and Minerals Division of the Ontario government. So Adam, as I say, has quite a strong technical and managerial background in mining, which is one of the reasons when he joined Carlisle Goldfields that I became very much interested in following the story, and the main reason why I have added it to my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. Abraham, I'm really glad that you could join me. Thanks for taking the time to talk to us today.
Well, thank you, Jay. It's nice to be here.
Really good to have you, and I should tell our listeners your stock trades in Toronto under the symbol CGJ. You can buy it down here in the States under the symbol CGJCF. Correct me if I'm wrong, Abraham, but 54.6 million shares outstanding, I believe, something like that.
That's correct.
Is that an up-to-date figure? I saw it trading in the U.S. down here earlier today in the 23 to 24 cent U.S. Market in U.S. dollars. Gives it a market cap of only around $13 million, if my arithmetic is correct, and that's despite the fact that the company has a lot of gold ounces in the ground. So I'd like to start out, Abraham, and ask you a little bit to talk to us a little bit about your project in Manitoba. You have a couple of deposits up there, I think maybe 4 different ones, but there's 2 in particular that you are really focused on moving through the economic stages, the McClellan and the Farley Lake projects. What can you tell our listeners about what you know about those projects, about the economics of those projects, and how far away might you be from putting them into production?
Sure. Well, thanks, Jay. Well, certainly what attracted me to the project in Lynn Lake, Manitoba, owned by Carlisle, and in joint venture with Orico Gold, AUQ on the TSX. Basically, it was a combination of infrastructure and grade. Lynn Lake, Manitoba is a former mining camp. The 2 assets that you mentioned, the Farley Lake and the McClellan, they're both past producers. They each produced 200,000 ounces apiece. And as a result, being brownfield sites, we feel that the permitting of those sites as we move through feasibility will be simplified somewhat. Because again, we're not dealing with pristine wilderness. We're dealing with a mining town. We're dealing with a mining camp. And I think that's what Orico recognized when they came in, did a private placement into Carlisle in November at 52 cents a share. That was at 100% premium to the stock price at that time. And in addition to that, they bought 25% interest in the project as a toehold on a joint venture. Now, they have the right to go to 51% by spending 20 million Canadian over the next 3 years. And then they can go to 60% by delivering a compliant feasibility study. So at the end of the day, Carlisle, can be a junior partner on one of Canada's next mine developments. And according to the timeline, that's been provided to us by Orico, to your question, when would we expect to see cash flows from this project? Well, we would go through various benchmarks, delivering a feasibility in either late 2016 or early 2017. Construction decision post-permitting in 2018, and cash flows in 2020. That's about 5 years from now. And, given what we've been through over the last 6 years since the global financial collapse, 5 years, in my opinion, goes pretty quick.
Yeah. Well, then, once you get to, if Orica goes to 60%, are you then required to contribute your 40%?
Yes, we would be a full participating junior partner. As it is right now, we're fully carried through feasibility, and but in addition to that, the partners each fund $2 million a year on exploration outside the feasibility study area, which is kind of exciting because we as Carlisle operate on the exploration side. And here we are with a $4 million exploration budget, which is kind of a rare bird in these difficult markets.
Boy, it really is. So did I hear you correctly? Did you say that how much did these two different mines produce? How much a year? How many ounces?
They produced, when they were in production in the 1980s and 90s, by Share Gold, a division of Sherritt Gordon Mines, and by Blackhawk Mining in the case of Farley Lake in the 1990s. They each produced in the 200,000 ounce range.
Wow.
Farley Lake was open pit. The average head grade open pit at Farley in those days was 4.2 grams,
Whoa.
which I think you'll agree is astonishing grade for open pit mining.
My goodness.
Our resource at Farley Lake is 3.2 grams, so I guess you could
still
say
rich.
Yeah, it's very rich, and that again is what attracted me to the project, because when one combines grade with infrastructure, it has a direct effect on operating costs, and I think ours are going to be some of the lowest in the sector when this thing comes to production.
So would you, I know you're in the process of doing economics. You've done a PEA, I believe, on these two projects so far, right?
That's correct,
and
yeah.
so is it envisioned that something along those lines in terms of numbers of ounces will be produced in the future?
Well, yes. In fact, the PEA, or Preliminary Economic Assessment, that we filed on the securities website in Canada called CEDAR in February of 2014, anticipates a 12-year mine life producing 145,000 ounces a year on average from the two deposits together, feeding a single mill.
Mm-hmm. Yeah, that single mill will be located, as I understand it, closer to the McClellan mine. How far apart are those two mines?
That's right. And the haul road from Farley Lake to McClellan, which is already built and in place from the old days, is 40 kilometers or 25 miles.
Okay, so you're hauling rich enough ore that the economics work. Is there some potential? Already you have, if I'm remembering correctly, something over 4 million ounces identified in all categories. Is that right? Between these two properties and a couple of others that you have there?
Yes, that's correct. In fact, Jay, I'm glad you asked, but in addition to these two 43101 compliant projects, deposits, Carlisle, or the joint venture, owns another 3 gold deposits which have 43101 resources that are posted to CEDAR. And the total resources measured, indicated, and inferred on the property today is 5 million ounces.
Wow. This is, and again, even if you assume only 40%, it's 40% of a big number, and yet your market cap, I feel confident in saying, isn't reflective of those values. In the ground, of course, ounces in the ground aren't worth anything till you get them out, but all the same, seems like a lot of potential here on the upside. So how far apart are these other mines then? And I would imagine that each of these mines might at some point have their own mills, possibly, or it's too early to say?
Yeah, I anticipate once this mill gets built at McClellan, it'll be in the range of 7,500 tons a day. It'll be bought and paid for through the production from Farley Lake and McClellan. And so the vision is that the mill at McClellan would be centrally located, because the other deposits that I mentioned, the burnt timber, the linkwood, and the Dunvegan occurrence along strike, they're to the south of Lynn Lake. So the mill at McClellan turns out to be centrally located.
Oh, okay.
Yeah.
And the grades on these other deposits, are they similar? Are they underground targets, or what are we talking about here?
They're all open pit targets in terms of what we're targeting, in terms of what our core assets are. It's all open pit that we're looking for. The exploration that I mentioned, we're about to announce, the start of drilling on exploration. We'll be focusing on that southern trend, while Orico focuses on that northern trend with those two feasibility deposits. To your question about grade, the grade in the south is about 1 gram lower. The average, weighted average grade between McClellan and Farley Lake is 2.2 grams open pit, life of mine. That's fully diluted grade. And the grades down at the burnt timber and linkwood deposits to the south are about 1.2 grams. So Orico determined that, in its wisdom, and we agree, that those deposits weren't quite ready for a feasibility test. And so the mandate in exploration is to find higher grade shoots within that trend.
I see. Okay. Well, what can you, Orico, what can you tell our listeners that maybe not that familiar with the gold mining industry? What can you tell us about Orico? How big a company are they, and what do they bring? Obviously, I suppose, technical expertise as well as capital to the program.
Yes, they certainly financed Carlisle to the tune of $10.6 million on the downstroke. They committed to $20 million spending on feasibility over the next 3 years. I think they'll spend it in 2. Interestingly and very positively, I think, for Orico shareholders, they also just announced a friendly merger of equals with Alamos Gold, another TSX listed and NYSE listed company with gold production in Mexico. Interesting, the market caps of the two companies were almost within 2% of each other when they announced their friendly deal less than a month ago. We've been told effectively that this merger is good for Carlisle. In fact, they've listed the Lynn Lake assets as one of their prime development prospects. And so we'll see, on a combined basis, we'll see a mid-tier mining company called Alamos Gold with $450 million cash on hand and a market cap of $1.5 billion. So, again, having been sort of identified as a top development prospect makes us feel pretty good. Yeah,
indeed. That certainly adds even more strength with Alamos there as well. Well, Abraham, there are a large number of companies out there that are competing for investors' dollars. What can you tell our listeners? What would you tell them in terms of giving them the sales pitch as to why they should take a really good look at your company as opposed to maybe a lot of the others that are out there, even companies maybe that are at your stage of development?
Sure, appreciate that. Well, the presentation's at carlislegold.com, but as I say, fundamentally, the vision and mission statement for Carlisle is where infrastructure meets grade. And ultimately, Jay, we show in that presentation how the McClellan and Farley Lake deposits stack up to every other North American development project, and we have the highest grades bar none. If you combine that with some of the lowest cost hydroelectric power in Manitoba, Canada, in the world today, and we've actually done that analysis, and it comes in number 3 in the world at about 3 cents a kilowatt hour. Compare that to, I think your listeners can compare that to their hydro bills, but
sure,
you combine those kinds of low infrastructure, low hydro costs, highway accessible, rail accessible, airport accessible from Winnipeg and so forth. You put those two together, and again, we're heading for operating costs that are some of the lowest in the sector. And we're heading for, a share of production that is probably, is several times what our market cap is today in terms of value. So from our perspective, look, we're on the path here. We're in feasibility. We have a great partner, and we're hitting benchmarks, on a regular basis. So from that perspective. The other thing is our PEA was run at $1,100 gold, and it had a 34% internal rate of return.
Wow.
Gold prices, as you mentioned earlier in your broadcast, are at $1,200, and we ran it at a U.S. Canadian dollar exchange rate of 90 cents, and that exchange rate is currently 82 cents.
Yeah.
And, it takes the IRRs actually into the 50s at current exchange rates and U.S. dollar gold price. So it's a very interesting project at today's gold prices. We don't need higher gold prices to be highly economic.
Well, that certainly is assuring. Of course, if we do get higher gold prices, which I believe are likely, but that's only my belief, that'd be icing on the cake. Then, do you, with the minute left here, do you see the possibility with higher gold prices of possibly adding ounces and going to lower grade, or is that not the characteristic of your deposits? Well,
what I see happening is I see The project being built on the basis of Farley and McClellan, as I mentioned, 145,000 ounces a year for 12 years at an average throughput head grade of 2.2 grams. That mill at that point will be bought and paid for. There are other deposits in the belt at slightly lower grade, but a correspondingly lower hurdle rate for production because the mill's already there. So I think that although Orico, then Alamos will build it on the basis of an initial project, I think of 12 years, I think they'll be there for 20 or longer, 20 years or longer.
Sure. Well, it's a really good story, and it's one that I want to highlight for my subscribers again in the near term now, having refreshed my memory of your story. Thank you very much, Abraham, for being with us today, and I look forward to keeping up with your story and having you on again sometime in the near future to update our listeners.
Well, thanks very much for having me, Jay.
Really good to talk to you.